Welcome everyone to the August 23rd and the weekend Stock Talk. So in yesterday's video, we talked about how it would not be impossible to see a 3% move in the indices today. And in fact, this is what we saw for a lot of the indices. Now, we also talked about upside potential as well, but let's just kind of roll back the tape and play it all over for you in case you missed it. So today, initially, the major point in focus was the Fed, Jerome Powell, and his speech and his tone on monetary policy. Now, this was received quite nicely. So in the pre-market hours, we had some China retaliatory tariffs. We got the Jerome Powell speech that was released, and then we got the Trump tweets. Of course, that's the wild card, right? Well, all these are wild cards. And that is the news-induced catalyst via Twitter, of course, that pushed the markets lower. He responded basically saying that the Fed has not done enough, and then responded with more retaliatory tariffs on China. So hence we began the sell-off. And we saw the implementation of these tariffs by more tweets just after market. So big picture is that we continue to be in a big rodeo ride in the broad markets. In the technical side of things, which I'd like to see, is what's happened now is we're back within the range. Now, the range is still here. We're still boxed in this range. One can compare this sort of movement typical to this sort of movement in December. That is a bear flag pattern. So again, I told everyone this. It's possible that we end up in a bear flag pattern to the downside. Okay, it's possible. But I expect support levels to hold. Now, I want to refresh everyone's memory as to where our support levels could be. So the first very important support level is this. And the lower we go, the more of a support level it will become. The reason is this is still defined as a bull market. And hence, as we push lower, I expect the support levels to be stronger. In a bear market, meaning lower highs and lower lows, I expect as we move higher, the stronger the resistance levels are. Does that kind of make sense? So if we take a look at this, here's your first line of defense. Now that defense has been defended a couple times, not what you want to see as a bull. So in this case, you see this area being defended a couple of times. We're coming back to the same vicinity. Now, once again, remember, we're carrying downward pressure. This downward pressure is quite high. So you have to note that if this breaks, then we're looking back down towards 278.52 as your next major support. This is a very critical support in the next few days. And these days will be Monday and Tuesday. Those are some big days. Now, all of next week will be big days because what happened essentially now is that here we had price compression. Here we released it all to the downside. So a lot of this can continue on to the downside. So we expect this level, 278.52, to act as support. Now, should that not act as support, we're going to have to look towards the white line. But we'll see the way we get down there, because if we get down there, which is the level of around 271.51, crossing the red line, the last line of defense, is going to be, it's going to start being pretty problematic. Now, as you all know, I'm looking at several charts, SPY and TVIX. So we'll go to TVIX in a moment, which tracks volatility. So I just want to give you some targets. The first line of defense is where we are right now, but the bulls now have to start over from scratch. They climbed. They tried to climb. And now, with one day, it was all taken back, have to start from scratch. So, with that, it's up to the bulls again to pull the weight and get us back above there. Until then, we're looking for more downside targets 278.34. Again, if 278.34 starts breaking on a weekly basis, and consequently, so here's the other side, right? Consequently, we talked about this. If TVIX starts breaking 27.28, okay? If price can even get there and get above there, that's a good enough warning signal for me, and we're going to be looking towards the other side of things. But until then, this today was a powerful move, yeah. But same story here. These are still the same patterns we have seen over and over again. Remember, I'm using this high to compare to this high, not this high here. Okay, so actually we're going to remove that. This is the high that we will have to exceed in order for the markets to convince me that we are in more than just a regular pullback. It's in a corrective phase or potentially something more. Okay, we're not there yet. Let me just tell you how much TVIX has to elevate itself before it convinces me. It has to elevate itself over 33%. Is that possible? Certainly. We went up 23% today. So 33%, it can take just 2 days or even 1 day of big panic and we can get up there. But the markets have to show me that first. I can't, it's just out of principle, looking at the SPY chart, I can't say with enough certainty that we are going to flip the trend so much, all because yesterday we were 3.4% from all-time highs, and today we took a step back and went to around 5.7% from all-time highs. One day ain't gonna cut it, but if those two things start lining up, I see us breaking this level. We're gonna look towards the other side, and then we'll progress from there. So, obviously, very shaky, this market. When I look at this trend right now, currently for the S&P 500, it's been a rodeo ride. Guys, let me just, I'm sure you all know this, but look at this. So this is from 16 to 18, right? 2018, early 2018, pretty much a smooth ride. And now look what everyone had to endure the past 2 years almost. Look at this move. So first of all, if you just look at this chart, right? You can if you said this is the chart of any chart, if you said this was Boeing, for example, and you gave me this chart and you said, this is, let's just say this is the 2-day chart, not 2-year, 2-day chart for Boeing. Each candle might represent 1 minute. And you look at this chart, you're like, huh, what kind of chart pattern does this exhibit? Is this going up or is this going down? Well, I would say short term, it looks like it's going down. But if you hold it for maybe 1 more day or 2 more days, or even 1 more day tomorrow, you're going to probably see a profit, right? Because you're probably going to break this high. Now, obviously, this is a different time scale, right? We're looking at 2 years. So instead of each candle being a minute, each candle becomes a day, which is much more emotional for investors, because instead of this candle being, let's say, this candle is only 0.3%, all of a sudden this is a 2.57% move. Again, your focus either is macro focus or micro focus, but in this case, expectation here is that these two levels will hold. Diving down here, again, we have to see how we dive there and at what time period we dive through there, okay? Because diving through there isn't very healthy for the markets, but bulls can recover that level if they do it very quickly, if that happens. All right. So we talked about TVIX, right? Let me just show you the TVIX chart. Obviously, it looks a little bit flipped. So this is TVIX. So we closed all the way down here yesterday, 16.54, and today we came back down towards that level, and we spiked off of there. Now, let me just say, for TVIX, it was very difficult to trade. Let me just show you. It was very difficult to trade from here to here, okay? Because no one can predict this move, right? This was the Chinese tariffs, and no one can predict this move, and certainly no one can predict this move, because you can imagine if you try to trade based off of tweets, right? This happens so quickly. This move, let me just show you how quickly this was. This was in a period of 4 minutes. We went 8.75%. Okay. Now, if I even take to the peak of that candle, it's over 10%. It was very difficult to get into TVIX if you were not in it already. Now, the rest of the day followed a pretty linear pattern, as you can see, pretty linear pattern to the upside. So those are the levels I'm watching. Okay. Interesting stuff. And oh yeah, I did a live stream earlier today. So if you didn't check out the live stream, I started the live stream when we were over here. So I was kind of talking through my thoughts about the markets, where we could potentially find support on the S&P 500. If you like me talking about intraday stuff, check out the live stream. It was pretty short, but I just wanted to go back and kind of talk about this chart, because at this time point, it was pretty predictable how there was a lot of fear, but it was a predictable pattern in which the pattern could have been day tradable. So that's why I wanted to place my focus on TVIX and volatility. So the rodeo ride continues. Okay, so crude oil. So with crude oil, it's not a surprise that crude went down along with the markets. So, I mean, crude was at resistance already, and you can see that it's getting wedged into... Still, it's moving down back towards the support area, looking for that support area to hold, but it's going to have to break one way or the other very soon. We talked about this. So, again, a little bit more downside to come, break in one direction or the other. Natural gas still moving on a downtrend. No change. This is continues to move to the downside. And gold futures had a nice push to the upside today. You can see gold going back near towards the resistance of 1545. We didn't completely reach there, but I saw some of the gold tracking ETFs doing pretty well today with this move. So, we're back above. We're back at near resistance. Can we cross it? We'll have to see it first on the daily close, but we're back near resistance, and that's pretty much that. This is still a bullish chart pattern. Would not be surprised if this breaks out, but yeah, overall, this is a solid pattern. Okay, so we'll see what happens over the weekend, starting on futures on Sunday. Again, we're going to have to be looking at these levels, SPY, very carefully. Members and I will be tracking all other indices as well to see how they are faring and potential signs of reversal back to the upside. But until then, stay safe in this environment. Actually, one more thing. I talked about this chart, right? The 2-year chart. If I just go down the middle somewhere around here, right? You can see that this is the midline. So we're pretty much teeter-tottering on the midline of these parallel lines. You also can draw these parallel lines via the parallel tool. So if you were to take the parallel tool and draw this in, you can actually make a pretty nice range out of this. Can you see that? So it's essentially those two ranges I have, but you're able to pretty nicely show that we're nearing the middle range of the range. Can we go dive down below? Certainly. But again, we'll have to see how we get down there, if we get down there. in the next few days to weeks. And with that, thanks everyone for watching this video. Have a great weekend, and talk to everyone soon.